Hello students, I hope that you all are fine and safe at home. In last video, I told you about goodwill, its meaning, features, nature and factors affecting goodwill. In this video, we will discuss types of goodwill, that is classification of goodwill, and one of the method of valuing the goodwill. Dear students, a small recapitulation for the meaning of goodwill. What is goodwill? Goodwill is the reputation of the business. Now we will be moving forward with the classification of goodwill. Goodwill broadly can be classified into two major categories: purchased goodwill and non-purchased goodwill. This can be also said as self-generated goodwill or inherent goodwill. Our first one, that is purchase goodwill. What is this meaning? What is purchase goodwill? Purchase goodwill is that goodwill which is acquired by a firm for a consideration, whether paid in cash or kind. For example, when a business is purchased and purchase consideration is more than the value of net assets, the difference amount is the value of purchase goodwill. Now, what is this term net assets to us? When we are going to deduct the liabilities, external liabilities from the value of assets, the residual, the balance of it will be termed as net assets. More about purchase goodwill. Purchase goodwill is that goodwill which is acquired by a firm for a consideration, whether paid in cash or kind. When a business is purchased and purchase consideration is more than the value of net assets, that is assets minus liabilities, the difference amount is purchased goodwill. According to Accounting Standard 26, intangible assets prescribes that purchase goodwill should be accounted in the books of account and written off at the earliest. Dear students, now let us jot down the main features of purchase goodwill. The very first feature of purchase goodwill, that it arises on the purchase of a business. Whenever any business is purchased, at that time only this purchase goodwill appears. The next one, since the consideration is paid for it, for that reason, it is also recorded in the books of accounts as stated by Accounting Standard 26 of intangible assets. When once it is recorded, another feature arises, that it is shown in the balance sheet as an asset. Another important feature of purchase goodwill, that is that the value of it is subjective assessment. It is ascertained when both purchase and seller agree to its valuation. It is amortized at the earliest but not later than its useful life. Now have a look with the main features of purchase goodwill. As I said, you people, you are able to have a reading of it. Now, after discussing regarding the features of purchase goodwill, we will be moving to our next segment, that is non-purchased goodwill. Now, what is this non-purchased goodwill? The goodwill which is self-generated, which is generated due to the efforts of the management, or in the context of partnership, we can say with the management, with the partners, with the hard work of partners. Such kind of goodwill will be termed as non-purchased goodwill or self-generated goodwill, or it can be also said as internally generated goodwill. Accounting Standard 26 of intangible assets prescribes that it is not recorded as an asset, so it should not be accounted in the books of account. In short, we can say non-purchased goodwill is internally generated goodwill. It creates due to the efforts made by the partners. We can have the features of non-purchased goodwill. Let's have a look on the features of non-purchased goodwill. The very first, the most important feature, it is generated internally due to the efforts made by the partners. Generally, it takes years and years to build such kind of goodwill. Its valuation is subjective assessment of the value. Accounting Standard 26 doesn't recognize it as an asset, and hence it is not recorded in the books of accounts. We can summarize the entire topic with the help of the difference in between purchase goodwill and non-purchase goodwill. You have to keep it in your mind, two important points regarding each one of it. The very first one, for purchase goodwill arises only at the time when the business is purchased, and non-purchase goodwill, it is generally internally generated over the years of time. The next point, for purchase goodwill, it is recorded in the books of accounts and shown in the balance sheet, whereas non-purchase goodwill is not recorded in the books of accounts, and hence it has not to be shown in the balance sheet. Before we will move to the next topic, a small home assignment for all of you people. You have to do a quick revision by answering all these 4 questions. The very first one, what do you mean by goodwill? You have to provide features of it, what is purchased and non-purchased goodwill, and what is the difference in between purchased and non-purchased goodwill. And now, after this, we will be moving ahead to our next segment, that is how to value goodwill. As again and again I said that valuation of goodwill is a subjective assessment. Value of goodwill, it is personal assessment of the valuer and is usually agreed among the partners. It is valued as per the method stated in the partnership deed or as per the method of valuation agreed by the partners. However, following 3 methods are followed for valuing goodwill: average profit method, super profit method, and capitalization method. First, we will be discussing about average profit method, and in next videos we will be discussing regarding super profit method and capitalization method also. Average profit method. Under this method, goodwill can be calculated either by using simple average profit method or by using weighted average profit method. We will be discussing each one of this method one by one. In this video, I will be discussing only about simple average profit method. Under simple average profit method, normal business profits earned by the business for the specified number of years are considered. In this, goodwill is calculated on the basis of the average profit multiplied by number of years purchase. Now, one by one we will be discussing what is this average profit and what is this number of years purchase. As you people have already studied regarding average. So average, over here average profit we will be calculating by adding all the normal profits of the given years, and it has to be divided by the number of years. For example, in 2017 the profit is 20,000, in 2018 the profit is 20,000, and in year 2019 the profit is again 20,000. What will be the average? We will be having a total of all the 3 years, that will be coming out 60,000, and because the number of years are 3, we will be dividing it by 3, that will be giving 20,000 to us. When I am using the word normal profit, this normal profit, what it means, it should be quite clear to all of you. While calculating normal business profit or future maintainable profit on the basis of past profits, any abnormal gain is excluded by deducting from, and any abnormal loss is included by adding to the past profits. Normal profits earned are totaled and average is determined. In short, you can say whatever is the given profit for the year, which is stated to you. From that profit, abnormal gains which are directly not related to the business, those are to be deducted, and any abnormal loss, if by chance it is there, it has to be added back in order to get normal profit of the business. Now, when we will be discussing about number of years purchase, what it means to us. It means the number of years for which the firm is likely to earn the same amount of profit after change of ownership because of the efforts put in the past. Normally, it is considered that any newly started business will not able to earn any profit during the initial years of its operation. Hence, one who purchases a running business pays goodwill for being in a position to earn profit in the initial years of business. That means, now when we people have to calculate goodwill in this method, what are the normal things which we are in the need of? The very first thing, we are in the need of normal profit. That is not the actual profit which is given. It is such kind of a profit from which the abnormal gains are already deducted and abnormal losses are already added. Then we have to find an average profit. Then we will be multiplying this average profit to the number of purchase years which is given, and then we will be able to have the value of goodwill. That means, what are the main steps to calculate goodwill in average profit method? The steps, we people are going to take 4 important steps. The very first one, we will be calculating normal profit. Then second, we will be finding out average profit. Then we people are going to multiply this average profit with the number of years purchase. And then in the last, we will be having the value of goodwill with us. Let's take an example in the form of a small numerical. For example, Mr. A purchased B's business with effect from 1st April 2019, and it was agreed that the firm's goodwill will be valued at 2 years purchase of average normal profit of the last 3 years, and the profits for the last 3 years were in 2017, those were 1 lakh, which includes an abnormal gain of rupees 10,000. In 2018, the profits becomes 1,10,000, which is after charging an abnormal loss of rupees 20,000. In 2019, the profits were 85,000, which includes interest of rupees 5,000 from non-trade investments. And we have to calculate the firm's goodwill on the basis of 2 years of purchase. Now, in this problem, how to get the solution of goodwill? How to find out the value of goodwill? See, as I said you people, that we have to take few steps in order to calculate goodwill in average profit method. What is the first step which I told you people? That is about to calculate the normal profits. See, in each and every year you are finding out abnormal loss or abnormal gain is given, or any such kind of income is given which is not directly related to the business. So our first step is to find out normal profit for each and every year. In the year 2017, the profits are 1 lakh, which is including an abnormal gain of rupees 10,000. It has to be deducted from this. So 1 lakh minus 10,000. So 1 lakh minus 10,000, this will be 90,000. In the next year, the profits are 1,10,000, which are after the abnormal loss of rupees 20,000. This abnormal loss has to be added back to the profit. This will create a new profit, normal profit, that will be 110 plus 20,000, that will be 1,30,000. And in the next year, the profits are 85,000, but it is including an interest of rupees 5,000, which is not related to the business. That means that is not a recurring profit for the business. That's why it has to be subtracted from this profit. 85,000 minus 5,000, this will be giving us 80,000. The total will be 3 lakh. When we people are going to add the profits of the 3 years, 2017, the normal profit is coming out 90,000. For 2018, the normal profit is coming out 1,30,000. And for 2019, the normal profit is coming out 80,000. Total in all, the profit is coming out 3 lakh. So average normal profit will be total profit divided by number of years. Now you are able to see the total average profit, how we will be able to get this 3 lakh divided by 3. which will be 1 lakh. Now goodwill has to be valued at the 2 years purchase. How we will be finding out? Average profit multiplied by number of years purchase, which is given to us as 2. Goodwill, the value of goodwill will be 1 lakh multiplied by 2, that is 2 lakh. I hope the way to calculate goodwill through average profit method is quite clear to you people. You have to keep it in your mind. What are the 4 steps? First you have to calculate normal profit, then you have to find out average profit, then you have to determine number of years purchase, and then with the end you have to find out the value of goodwill by multiplying average profit to number of years purchase. That's all for this video today. Have a good day. Goodbye.